What is the absolute cheapest life insurance you can get? That is the title for this particular episode. I'm Chad McMahon with Protect with Insurance. If there's anything you want to see added to this video or to the blog on the website, reach out to us at hello@protectwithinsurance.com. Or if you want to see something entirely different created and added, please let me know there as well, and we'll get on that right away for you. Now, what are the cheapest options that you have when it comes to life insurance? So this is a two-prong answer. So firstly, let me say that life insurance, there are a lot of options out there, as I'm sure you know. We tend to lean on the side of assuming that you're intelligent, that you know which way is up, and so I'm always going to be speaking with you like you are an intelligent person that's done at least some homework, or at least talk with some people, that kind of thing. So life insurance options. There's whole life insurance, which is the most popular with seniors. There's term life insurance, which is most popular under the age of about 45 or 50. Or you do see it sometimes, it's only about 5% of the time. You'll even see term life insurance policies over the age of about 60. That's going to be for people that are on 3 or less prescription medicines, no moderate, no major, no severe medical conditions. You've got to be much healthier to get your term policies. Now, that being said, we've got whole life, we've got term, we've also got accidental only life insurance. Now, a lot of people shake their heads and say, no way, Jose, I'm not going to do an accidental only policy. What you need to know is that this is the absolute cheapest life insurance. So if you are on an extremely tight budget and you're looking at, I've got to spend less than 20 or 30 bucks a month, but I want to have my cake and eat it too, and I want to have a $50,000 policy or a $100,000 policy, this is actually the way that you accomplish that. Now, you can do this up until the end of age 70. Once you're age 71, you can't get an accidental-only policy. The other things that are important to know about it, accidental-only life insurance lasts until you're age 80. Now, most carriers out there, these aren't our carriers, but most carriers out there, they're going to cut your accidental-only life insurance in half at age 70 or at age 75, and then it only goes till age 80, and then you're done. Ours doesn't do that. Ours is full accidental only coverage. Let's say you get a $200,000 accidental only policy. It's going to stay $200,000 accidental only, and it's going to stay that way until age 80, and then the whole thing stops. So you do need to know that going into it, that it's treated like a term, but with no health questions. So all they care about when you get your accidental only policy is, what's your age? That's it. So if you're under the age of 70, then you can, or I should say if you're under the age of 71, then you can get an accidental only policy. It goes till age 80. Now, other things that are important to know, if you're under the age of 45, 50, and you get an accidental only policy, you also have the option of getting return of premium accidental only, which is really cool. So you keep that until around age 75. I know it gets a little confusing at this point. This is just for the people that are under age 40, 45. If you get a return of premium accidental only policy, you actually get all of your money back at age 75. You keep the policy until 75, you get every penny back, which is a really cool thing. But otherwise, for most of us, it's not going to be return of premium. It's going to be accidental only. This is going to include everything from prescription medicine issues resulting in death, firearms, car accidents is the big one, fire, suffocation, doctors make a mistake, trip and hit your head. There are a whole bunch of things that fall within this accidental only category. There really are. So if you have questions on that, please reach out to us. Let us know. Now, if you are participating in high-risk activities, a lot of those are not covered. And by the way, one relatively common high-risk activity that we see is riding a motorcycle without a helmet. If you have a helmet on, you're fine. No helmet, sorry. That's a very easy thing to prove. So if you're riding around on a motorcycle and you have one of these policies, just wear your helmet. It's good incentive. The spouses love that. They love it when you're encouraged to ride your helmet. So this will be kind of that extra shove to keep your helmet on while you're riding your motorcycle. So that being said, accident-only policies, very, very inexpensive. Term falls in second place. Term full coverage life insurance, but you've got to be extremely healthy to qualify for that. The other downside of the term, and this is why they're so inexpensive for how much coverage you get to the end of the term, one of two things happen. Either cold turkey, you lost your policy, you've got to get reinsured, and then your new insurance is going to cost more, obviously, at that point. You may not qualify for term anymore, and then you've got to go with whole life coverage anyway. Or you keep your term, and your price goes way up. And something that you can predictably expect is that with these term policies, price can go up 5-10 times what it was before to keep your term. And then it'll continue to increase exponentially as you get older. Every year, it's going to keep going up. It's a crazy thing. So you need to know that going into it. That's why you see terms tends to be for people that are under the age of about 45 or so. They get terms. They're not too worried about it. They can get a 20-year term, and they say, well, I can get a smaller whole life insurance policy down the road. And that's true. They can. So that's why you tend to see it that way. Now, whole life insurance, the good news is, and this is most of our clients getting whole life insurance, it's the burial insurance policy, it's the senior's choice kind of thing. So for whole life insurance, there are ways to save money. The best way to save money is A, get the amount of coverage that your beneficiaries are truly going to need. So don't hold that you're going to have to get a $40,000 or $50,000 policy. Maybe $10,000, $20,000, $30,000 is enough to save you some money. The other thing is you want to get yourself into a preferred health rating. And the way you do that is with a system like ours where we pull from all of these different life insurance companies. And then depending upon your health, we grab the 5 or the 10 companies that you could get a preferred health rating for, and then we price them out. And then we say, okay, out of all of these, this is the best price that you can get in the country, and this is based on getting a preferred health rating, which brings that price down a little bit for you, and it can make a big difference. It can be the difference of 30%, sometimes even 50% of cost, so it's very, very significant because it locks in that price on a whole life insurance policy for the rest of your life. So if you're saving, let's say, $30 or even $100 a month for the rest of your life, that is huge. So that's what we try to do. We'll bend over backwards for you. So I hope this has been helpful. Please reach out to us again at hello@protectwithinsurance.com, or even better, give us a call at 928-323-0933. We'd love to help you. Take care.